Hi, welcome everybody to today's event, A Glimpse into PE with Fordham, Private Equity and Venture Capital Club, and NYU's Economics Society. I'm Avneet Guman, the current president of the Private Equity and Venture Capital Club. We are so happy to have you guys on today. And if you guys don't mind, it would be extra amazing if you guys could turn on your cameras and we could see your faces and, have a little bit more interaction going on. It just makes everything a little bit more cool and interactive for us. So I'm gonna pass it off to Gavril. He's the current head of NYU's team.
Thank you very much. I just want to say a thank you for everyone from the NYU Economics Society who turned up, and we're very happy to see you all. Stay tuned, we'll have more of these things coming on soon as well. And thank you very much to Lev, Anvit, and Clarissa for taking the time, and Ikra, sorry, for taking the time and helping us collaborate on this.
Okay, hey guys, very happy to have you here, and we are especially excited to have Clarissa Cartledge here. So as a Fordham Gabelli School of Business graduate, Clarissa was a vital part of the undergraduate school until she graduated in 2008. She studied finance with a concentration in alternative and value investing and a minor in economics. And she was part of the leveraged finance group in Barclays. During her time at Fordham, she managed the $1.5 million Fordham University Endowment. And so we'd like to introduce you to Clarissa.
Yeah, thank you so much for having me. I'm really excited to be here, and hopefully we can make this a great discussion for everyone and make it interactive and answer your guys' questions at the end too. So thanks for having me.
So I think we're just going to dive into this. So what made you interested in studying finance? Moreover, why did you specifically choose a concentration in alternative and value investing?
Yeah, so before coming to Fordham, I was in GSB, but I had no previous experience in finance before or really knew what finance was about. So when I first took my first finance class, which was just financial management, I found it really interesting that it was both an intersection of corporate finance, where you learned about businesses, how they operated, what made a good business versus a bad business, what decisions management had to drive value for the business. But then there was also a super exciting and interesting market side of the business, which was, how does this drive the overall stock market, bond market, and ultimately tie into our ever-changing and super dynamic economy. And so I think that having this intersection of the two, studying finance, really gave me the ability to learn how this ecosystem worked. And so once I started taking finance classes, I became really interested in specifically alternative investments and value investing. And I think it's just a really great opportunity that we have to be able to see how alternative investments work, what they are, and definitely gives us an edge versus other schools that don't cover these topics. And with value investing, it's such a strong pillar of investing in general. All the books that you read, Howard Marks and Warren Buffett, all touch on value investing. So really being able to understand what it is, how they look at investments, it's really the root of everything. So being able to study that at Fordham gave me a really great foundation for starting a career in investing.
That's great to know. So tell us about your experience in managing the Fordham University Endowment, and what skills did you obtain when doing that?
Yeah, so the Student Managed Investment Fund, for background for anyone who's not too sure of the program, Fordham gives their students I think it's now at 1.6 or 1.7 million of the endowment to manage in a real portfolio covering macro, bonds, and stocks, both global and domestic. And I think this is a really great opportunity to get hands-on learning experience at an undergraduate level. And it's the closest thing that you can get at Fordham to having real life investing experience. Looking at the class, and especially looking backwards now while I'm in a career in investing, I think that I learned so much that's tangible, and that I was able to bring into my current role right now. And I think in the class, I would say about 25% of the class work that was given was actually for your grade and assigned, whereas the other 75% was purely driven off of students wanting to make a difference and wanting to leave the portfolio in a better place than they originally entered the class in. And I think that this mindset and motivation that we had to drive value and to create something during our time in the portfolio is very similar to what the real world is like. Especially in private equity, everyone who's in the fund is vested. They're super motivated to make sure that their investment does well. There's a ton of ownership and responsibility that comes with an investment. And so having that feeling of risk and pitching to your classmates who are your peers, seeing things when they go poorly and understanding where you had your blind spots in an investment is a really great opportunity to learn early on. And to be honest, all of us have blind spots in investing. So being able to really see those early on was really helpful. And I think that overall skill set in combination with the leadership experience really helped me in my position now.
So building upon your experience working with Endowment and some of the other initiatives that you were involved on campus, how important is it for graduate students as well as undergraduate students to be involved on campus, to take on leadership positions? If you can just give us some color on that, please.
Yeah, definitely. I would say that you can definitely get a lot of the theoretical experience from your classwork. And I think that both on the graduate and undergraduate side, Fordham does a really great job of giving you classwork that is very real life and transferable. But I think that most of the experiences that I learned were through clubs. And I think that it was a way to show our passion. We all had different things that we were super passionate about, whether it was alternative investments or smart women securities or sustainability. And so having these outlets where you could truly create something and help other students that were also passionate about the same thing. Those were the experiences that I think gave me the building blocks to do stuff similarly in the job. And I think that, in a job, you can definitely get by doing your work and, kind of covering the bare minimum. But the people that continue to succeed and continue to take on that next promotion or next role, whatever they're interested in, are the people that are creating something for the firm and they're creating value and they're taking on that leadership role. And it could be seen in so many different things, not just in like doing your comps or like doing a model or anything like that. It's like seeing something and saying, how can I make this better? And so I think that Fordham's clubs definitely gave me that type of mentality for the job.
So building upon that, it seems like your strong academics and strong extracurriculars allowed you to get your first internship. So what advice do you have for someone to ensure that they get an offer after the internship and to get the internship in the first place? So what are your thoughts on that?
Yeah, definitely. So I think when I was approaching first getting the internship, I definitely had a feeling that I was behind. I think I didn't come from a traditional finance background, so I had a sense of feeling like everyone else around me, knew all this stuff, and I was still trying to figure out like what investment banking was. So I remember that the most important thing that I did was just learning from my peers and trying to pick up anything and any phrase I could, and then researching that as much as possible. So I would sit in the trading room and just overhear conversations all day while doing my homework or working on group projects. And whenever I heard someone mention, what leverage finance was, I would research that and just spend time constantly learning from everyone around me. And I think that's very similar to the job too. I think that, right now we're in the work from home situation, but I think that most of the learning that you do on the job is also brought from just hearing conversations and phone calls from people older than you and in a position older than you. And then in terms of actually securing the job for the internship, I also remember that, and I think a lot of people coming into the internship feel this way. I definitely did. I was so scared because I didn't know how to model. I was about to cover a group that focused on natural resources. I had no clue how the oil and gas markets worked. Basically, I was clueless about the job I was about to start. And so I was definitely really nervous, but I realized that most of the stuff that's taught on these jobs can really only be learned on the job. And the things that you bring into the internship is a good attitude, someone who's willing to go the extra mile, they're curious, they want to take on the next opportunity. And if you don't know a technical skill, they're not going to be worried that you're not going to be able to pick it up because they know that you're interested in learning that technical skill. So you'll learn it eventually. And I think everyone comes in with different skill sets before the internship. So you're definitely, especially coming from Fordham, not behind at all. And I think that, really knowing yourself and understanding if it's something that you're interested in, because like I said, like you can get through your first couple years listening to calls, putting yourself on mute, not asking questions, just kind of going through the motions, but you're not going to be the person that's going to secure the job or get the next promotion if you're not the one being curious, trying to have your voice being heard, speaking up on calls, speaking up in meetings. Those are the people that actually take away the most from the job and are able to secure the offer and make that next step.
So speaking of going the extra mile and curiosity, what are some of the things that made you stand out from the rest of the analyst class and ultimately get that full-time position?
Yeah, I think that, it's definitely, I don't think there's really any special formula other than someone who wants to be there. And I think that especially in the first couple years of a job, there's so many people with different interests and motivations. And so I think that if you're a person who always has a good attitude and always wanting to work hard and wanting to be there, they're going to give you the better stuff to work on. They're going to want to have you on your team. They're going to want to work with you more. They're going to want to put more attention and more interest in you. I think surprisingly, a lot of times people don't have a good attitude and can tell clearly when, someone's mad about something or someone just doesn't want to be there. And it definitely shows. And so, there's always tough parts about a job. There are going to be times where you're exhausted or you're stressed out or, feeling a little overworked. But I think that it's all about how you approach these situations, how you approach tough conversations, how you handle things maturely. All of those little skills is what makes a good analyst or associate or VP. It's not necessarily the person who can, have the model done the quickest. Like, yeah, that's a great skill to have, but in the end of the day, if people don't want to work with you, they're not going to be vested in your growth and you're not going to continue to get better.
Clarissa, tell us, in your opinion and experience so far in the PE investment banking industry, what would you say is the most understated reason why a person would not be hired?
That's a good question. I think that you have to know yourself and you also have to be genuine about what you want. I think that people can clearly tell in an interview what's rehearsed and what's not. And especially when you're coming to very competitive positions where there's only, X amount of spots for hundreds and hundreds of people applying for these positions, it's very obvious when like people are driven by motivations that aren't the true love and passion for the job. And I think that, a lot of people have different motivations for wanting to do the job, but like I said, things can get tough. The job is definitely a grind, and they can see if someone is not necessarily in the right mindset to take on that next journey, I guess.
So Clarissa, what would you say were the biggest challenges for when you were starting your first job after university?
Yeah, definitely. It's interesting because I think the transition from undergrad to Barclays was, I think that it's a very typical transition for them to get a new analyst class in and teach them how to do things, and you learn from people above you, and you continue to kind of grow with your class and learn new things, and your role is very well defined. I would actually think that the transition from banking to private equity was tougher for me, and I think that's where I learned the most. And I think that was because it was something where you felt comfortable in your job at my previous job in banking, and I knew how to do things, I knew how to work with people. But I think that the ownership and responsibility that I felt in private equity versus banking was a lot higher. And, the things I learned a lot about myself during this time, I learned how to, manage work relationships a lot better, manage stress, time management. I think that when you're put in a situation where everything is new to you, everything that you're assigned, it's like, okay, let me try to figure this out without asking a bunch of people. And I have to make sure it's right. And that sense of, not having anyone to check your work anymore, like in banking, I think that was definitely the biggest learning experience, but I think that's where I grew the most in terms of like technical skills and soft skills too.
Can you talk a little bit about your move from leveraged finance, then to the global industrial group and to PE?
Yeah, so I was really fortunate to be able to see a lot of different roles since graduation. So like you mentioned, I graduated in 2018 and joined the leveraged finance team covering industrial companies. I think that in that group, I was able to really understand how an LBO works, how it's financed, the different financing structures. Most importantly, I learned the legal doc side of it, which ultimately I think has come in most handy during my role in private equity. And also in LevFin, it's awesome because you're constantly seeing different leverage buyouts happening. So you're always learning about the sponsor thesis. You're always learning why they're trying to do an investment, what the risks they see in the investment. And you're also on diligence calls and seeing what questions they ask, why they're asking one question versus the other. So I think it was a really, really hands-on group that I was able to just see a ton of deal volume. So it was a really, really great experience. And then my second year, I moved to the industrials team, and it was actually a really fortunate situation where our industrials team was didn't have enough people, so I was going to go see it for a few months and ended up staying a year. But this gave me a really strong corporate finance background where I just got to kind of hammer out all of the technicals and the foundation that I needed for other jobs. I think LevFin was great for transactional experience and running a process, but it was definitely more niche than your traditional classic banking. So the industrials team gave me like a really strong corporate finance background. And I also really enjoyed seeing a company that I would work on for their first debt financing all the way until when they did their IPO, and really following a life cycle of a company. And then when I moved to private equity, this kind of brought all the skills and the foundation that I built from banking, but brought it to a different level in the sense of having to take more ownership over everything. You actually stay with your investment. So versus in banking where you're done with the deal, you sign the deal, it's over with. This one, you hold it for another 5 years. So after you're done signing a deal, that's when it's time to figure out, okay, how can we drive value in this investment? What can we do operationally? Are there bolt-on acquisitions that we can do for it? Is there something with the management team that we need to change? And so this is something that's on your track record and that you hold on for the next 5 years. So that, I guess that skill set was very different, and have definitely continued to learn a lot from it.
You mentioned corporate finance a number of times. So after a few years in the industry, looking back, and if you were in school again, what kind of courses would you say, okay, for banking, this is what I would take, and for private equity, this is what I would take?
Yeah. So for banking, I would definitely say, pay attention to the financial management, investments in securities. We took a modeling course, but I more learned modeling on the job. And, there is a corporate finance class. So definitely, your finance 101s is definitely helpful for banking. I would say also the interesting thing is you want to be familiar with the terms and know what each one means, and what is EBITDA, how to walk yourself from all the way through the income statement, balance sheet, cash flow, all those kind of things. Accounting is super helpful. I never realized that until after graduation. But all those classes I think are super helpful. But I also think that a lot of the times in banking, it's dependent on how a group likes to do things. So a lot of the times you learn how to do certain either adjustments or modeling or comps based on how your group likes to show them. So I think it's important to have the foundation. But then in terms of being a more well-rounded, I guess either banker or working in PE, that's where value investing and alternative investments really helped me, because I was able to understand the private equity ecosystem, how hedge funds came into the mix, what was the difference between just a normal asset manager versus a private equity investor versus wealth management versus fund of funds, all these different I guess alternative investment roles that I never really understood where they stood in terms of the ecosystem and how they all fit together. And then in the value investing sense, I brought that a lot into banking, where I was understanding why a sponsor was buying a certain company or why another company was trying to acquire another company. Because a lot of the times, the core thesis of everything is just floating in every single job, whether it's banking or private equity. And I think Fordham gave me that edge versus other schools, especially the liberal arts schools, where you were able to have this edge and be able to have conversations with your managing director about alternative investments or value investing, and you were knowledgeable about it versus other people who hadn't had that exposure before.
So given that you had a concentration in alternative investing, you had exposure to the private equity world. There aren't sometimes as many courses offered at the undergraduate and the graduate level about private equity. And some people say that they do understand private equity, but many people don't. So can you discuss your current role in private equity? What is private equity? What do you do?
Yeah, definitely. So, I mean, the core of private equity is that we buy and own companies for 5 to 7, sometimes even 10 years. And during the life of the ownership, we try to, improve them operationally, improve their management team, and you can really drive value in a couple different ways, whether it's like delevering your debt and just paying off debt, and putting more equity into the business, buying a company at a lower multiple and selling it at a higher multiple. And then the third way is just, margin expansion, making revenues and EBITDA grow. So that's kind of the overall thought process of how you can make money in private equity, and why we invest in these companies. From my day to day, so I would say that private equity, I spend about 30% of my time in portfolio management, and then about 70% of my time in new opportunities. So with our portfolio management, those are portfolio companies that we already own. And I was assigned 3 portfolio companies when I first entered the job. And so this is, listening to their board meetings, being a part of the board meetings, understanding and helping management teams make decisions on, do we want to make this investment for building a new facility? Do we want to invest CapEx? And is it going to yield a higher return for the business? What do we want to do about the management team? Like if XYZ is underperforming, do we want to replace them? And, figuring out and kind of guiding them through their lifestyle and their life cycle, and their experience. And I think that this changes fund to fund. Some funds are very hands-on and more focused on, really making sure every single facility that the company owns is, performing at 100% capacity and all this kind of stuff. At Goldman, we take a more board level approach. So this is using our operations council and ourselves to really drive value with the management team and guiding them through the process instead of taking a fully hands-on approach. And this gives us the opportunity to spend more time on new opportunities and deploying capital. So the other 70% of my time is spent on these new opportunities where we take the money from our LPs that we fundraise for, and we buy new businesses with it. And so we start by just looking at new opportunities, and we find these new opportunities either through investment bankers that they send us their SIMs, or even just our own idea generation, and we go out to the market and try to figure out a way to get that deal done. And when we first look at an opportunity, it's just very basic. It's figuring out, how does this company make money? Who are their customers? What are their products? Like the most basic things, and just like putting together a small pack on what that is. But as time goes by and as you decide that you really like this company, that's when we hire McKinsey to help us with market diligence, KPMG to help us with tax diligence. And we really figure out every single piece of the company and figure out the attractions and risks that the company has, and figure out if it's something that we want to invest our money in, and if we can get comfortable with the risks, and if we find ways to ultimately drive value and make money on the business. And during this time, we're presenting to our investment committee, we're defending our thesis, we are going really hard in diligence, and we're also competing against the 5 or 6 private equity funds that are trying to win this business too. So the whole process itself it gets really exciting, super intense, because you're competing, but you're also figuring out if this is something that you want to do. And yeah, it's definitely a really exciting process.
Clarissa, did you experience any difference in culture when you moved from Barclays to Goldman Sachs?
Yeah, so I definitely think that there were differences in culture, but I think that was more driven by the nature of the job. In banking, you work a lot more with people either your own age or a couple years older than you. So it's a very collegial feel and atmosphere. In private equity, most of your deal teams are staffed with either older people or like very thin. And so I think just by the nature of it, you are dealing with older people, and it's not like you can talk to them about, the things that you're excited about as much because they're not really on the same wavelength. But I think in general, both at GS and Barclays, I was really fortunate, and I also made a conscious effort to seek out cultures and opportunities that would give me a really great learning experience, and also would allow me to have the support from them to help me grow as either an investor or a banker, and just really make sure that it was people that were going to be supportive of helping me develop. And so I was really fortunate to find both and be able to be a part of really great teams and meet really great people. But I think it definitely changes job to job, culture wise.
Clarissa, you've given us some insight already about this, but what was some of your reasoning behind the decision to transfer from Barclays to Goldman?
Yeah. So I really enjoyed banking. I think it was like a really great experience. I found it really interesting. I liked the, competitiveness of seeing, trying to win a deal over another bank, and being able to like see one deal after another, different styles, different sectors, different businesses. You definitely got like a taste for a lot of different things. I remember like 2 months would go by and be like, oh my gosh, I'm just such a different person than I was like 2 months ago in terms of learning. And I think that it was a great job. And I think that, people who continue to move and grow and develop in banking have really like fruitful and successful careers. But I think that where my interest ultimately lied was in finding something that I would be able to defend my thesis, express my opinions, really be the person creating something and driving value, and taking a business that was inefficient or not in the right, not with the right management team, or different ways that you can take something and make it better. And that's where I really, really found things interesting. And I wanted to create partnerships with management teams. And I just found the whole private equity like experience really, really exciting. So even though I really liked banking, I knew that this was something that I wanted to do later in the future. And it was just the right time and the right opportunity that came up. And so I decided to make the switch. But yeah, like I said, I think that it really, really depends on what everyone's interests are. And I think it's all about being true to yourself and figuring out, what excites me and what's something that I see myself, wanting to do and wanting to spend energy on, and get through those tough times that everyone has.
Not only did you transition from one firm to another, but you also you moved from analyst to associate. So in terms of responsibility, how did that change?
Yeah, definitely. So I think that, like I kind of mentioned a little bit, so I think that the ownership and the responsibility does change a lot. So, you don't have someone checking your work anymore. Everything you do does make a meaningful impact in your investment's performance. And it's really ticking and tying every single document that comes through, every single number that gets presented, and figuring out and asking yourself, okay, why is this not doing better this year? Like, why do these numbers look off? What's happening? Like really digging in and making sure that you have a pulse on what's going on in the business. and making sure that the company is on the right track. I think that, like I said, you have something that sticks with you forever. Whereas in banking, one thing that I liked, but also I wanted to kind of move away from was like, once you did a deal, whether the deal went right or wrong, the deal was over. I wanted to have something that I saw it grow and saw it develop. And I think that having that sense of, if I don't get the risks right, if I don't, figure out or diligence this correctly, this will go poorly. And making sure that when you have an idea and you have something that you truly believe in, no matter how much pushback you get, if you truly believe in that, then that's something that you're willing to go after and figure out the right way to get the investment done. So I think all those things, combined, it definitely leads to a different sense of responsibility and ownership. And it's been really exciting so far.
That's great to know. Are there any parallels you can draw between your experience in managing Fordham's endowment fund and your professional work?
Yeah, so I definitely think that, the sense of wanting to do something because it makes it better in the end, and going the extra mile. Like I mentioned, most of our work in Smith was purely because we wanted the fund to do well. I think that that's just the biggest thing that I took away from it. And I think that, that I always look back and I was like, wow, we were so motivated for our fund to do well. And I think that it's exactly the same way in PE. It doesn't go away whether you're a associate, a principal, a partner. Everyone is constantly moving at 150% to make sure that they ticked and tied every single piece of the diligence and don't have any blind spots, and that we're, putting our LP's money in the right place. I think that, there's not only is everyone vested in the fund, but then you also have, people's money that you're putting to work. And so, ultimately it's like your fiduciary duty to make sure that you're making the right investment and really, dotting every I and crossing every T. So I think that that's kind of the same mentality we all had in Smith. And I think that it's a good feeling and a good thing to practice, having that sense of risk and being like, if I pitch this bad security and it gets accepted, then, I may lose money for the endowment. And that's like a good sense of risk to have. And then vice versa, where it's like, if I vote this security into the portfolio and it does bad, I also have ownership of the endowment not doing well. And I also think just generally, I think that if anyone's interested in a career investing, I think that the student managed investment fund is like the only way to get yourself the best experience. I think there's like no excuse for you not to do Smith if you want a serious career in investing.
So this is more of an overarching question, but what future trends do you think are going to be influential in the next 5 to 10 years in banking and private equity? What are you saying?
Yeah, definitely. So I think that there are a lot of trends that come in and out of fashion for sure. For example, I think like the big one that we're seeing right now are the SPACs. And I think that, I've personally lost a lot of really great processes because they went SPAC, and these SPACs can offer 2 times the valuation that a traditional private equity fund can get to. But I also think that the ability for them to deploy capital and the ability for them to, like, they do their diligence in a third of the time that we do our diligence. And I think that, things always go in and out of style. They, things, and I'm not saying SPACs will or will not, but, things always have their bubbles and have their prime time in their era. I think it comes down to disciplined investing. And I've definitely learned that a lot at GS, where, we might lose out on a process because we weren't the nimble, aggressive, fast person to just up their valuation and really dive into something. If we don't like something at a certain price, we will not buy the company, even if we think it's the best company in the world, because we're disciplined at a certain, we're disciplined in our way of thinking and making sure that we stay true to our thesis. And I think that that's really, really important, because, you know, you might lose out on something, but that might not have been the best opportunity then. And there's always going to be something else that you can make money on. So it's all about staying disciplined. I think also big picture, you know, some of the big things that we're seeing is like a huge push to sustainability, especially in all of, like across all the private equity funds. So I cover energy investing, and, you know, we used to own a ton of, you know, midstream companies, you know, fracking companies, things like that. But there's been a dedicated push towards renewable energy. You know, we don't want our name, especially as Goldman Sachs, to be tied towards fracking or anything that could be negative in the press. So we've fully moved to energy transition, which is like renewable energy, electric vehicles, everything that has like an ESG angle to it. So I think that's definitely a huge push. And then I also think diversity in either board seats, management teams, investing in general. So we've made a pledge that we're going to have at least one female on every single one of our portfolio companies' boards. We're also tracking diversity stats to make sure that our boards are diverse. And I think that's seen, you know, all across the industry. I think, you know, you're really making sure that that's taken into account, and that that's important in ultimately investments performance. So I think that those are two things that are here to stay.
Having worked on the energies desk, do you think that sustainable investing, do you think this is a fad, or do you think it's here to stay?
Yeah, so I definitely think that this is where things are moving towards. I think though that, you know, like everything, and kind of like what I previously said, is that you have to be disciplined in it. I think that it's so easy to see a bunch of people making money and making really quick returns off of, you know, these electric vehicle companies that just keep getting picked off by the SPACs for, you know, 10 times a revenue multiple or an EBITDA multiple of 3 or 4 years out. I think it's super easy to see all these like renewable energy wind farms just, you know, getting priced at super high valuations. But I think it's, you know, truly still going back to the roots of investing of, you know, is this a good company? Do they have some sort of barriers to entry? You know, how are they positioned in the competitive landscape? What's their market share? What's their ability to hold market share? What's the wallet share? Like all these questions, it still goes back to the fundamental questions of, if you were looking at, you know, a widgets maker versus the new trendy, you know, electric vehicle company. I think it always goes back to that. And that's how you avoid the fads. And that's how you, you know, see other people, either some people make a ton of money and there's a lot of people that lose a ton of money. And so I think if you're the person that's just set in what you believe in and what you see as a good, stable company, you know, that's what does well in the end.
Clarissa, you've spoken about your biggest challenges, and I, as a woman, and I think a lot of women in this group would want to have an answer for this. How was it entering into investment banking as a woman, and what challenges did you have to face?
Yeah, so I, you know, definitely have had a lot of experience in this. So in the industrials team, the team was about 80 people, and there were 5 or 6 female across the entire group, so like both senior and junior. So it was definitely difficult to you know, have sometimes those times where you just wanted a girl to talk to and get the advice, or even see a woman who was senior and saw her path and say, oh, I'll be okay. Like, she was able to do it. How was she able to do it? And just ask those questions. So I think that, like, it's important to seek strong mentors and strong friends, even if they're not in your group. But it's important to seek, you know, strong female relationships, you know, either in other groups, or, for example, like at GS, I cover energy, and that's a very male-driven subsector. And so I don't have a lot of girls in my group, but you know, I was able to reach out to the consumer partner and form a really strong relationship with her, and use her for advice, and see her path, and ask her the questions that, you know, you're always scared to ask those questions, because I guarantee that those people have all thought of them before. And I think it's also important that, you know, when you join a women's network, or if you join some sort of group of women, that you are truly helping each other instead of seeing it as a way to, like, be competitive. I think that, you know, sometimes the drawback is, like, you know, I've seen a lot of times where, like, you know, females could be competitive with each other versus supporting each other and building each other up. And I think that if you're the person making the dedicated effort to bring women together, I think that we all, you know, want to know each other more and be friends with each other and use each other for support. We're all going through the same questions, problems, all that kind of stuff. And so it's really, you know, bringing everyone together and having that feeling of support instead of competition. And then lastly, I would also say, like, you know, I definitely, you know, was open. I think at first I was like, oh, like, I'm scared to be friends with guys, or, you know, like, oh, they're so scary or whatever, but they're all, you know, goofy, fun, you know, people the same age or older than you and stuff like that. And so, yeah, you know, a lot of my friends were guys in the group, and it helped me get their perspective too. So sometimes I think I would be, like, emotional about something, like the staffer told me XYZ, and I would get emotional, and they'd be like, come on, just, you know, blow it off. It's fine. Like, just let it roll off your shoulder. And I'm like, but it was hurtful. And they're like, no, just let it roll off. So I think having that, like, male perspective and seeing how they handle things really helped me, you know, see a different side of it, and also work with other men because I saw their point of view. So I think all those three things, like, really help shape the experience.
Thank you. These were some great suggestions. I think a lot of us can use these here. Tell us about the skill sets that you use at your current job, which is mostly overlooked, but you think they're really important.
Yeah, I would definitely say, like, curiosity and a positive attitude. And I think that, you know, that's because, like, I think the skills of, like, modeling and building a PowerPoint and all those kind of things, those everyone has those by now. Like, if you're, you know, sitting where you are, it's because everyone can do the baseline, that everyone passed the model test, everyone passed the interviews, that kind of stuff. And so it no longer becomes something about, like, you know, oh, this person's more technical than the other person. It really becomes, you know, how is this person thinking about an investment? What questions are they asking? Are they asking great questions? Are they not curious enough to, you know, dig deep into just, like, Googling things, looking at news articles? Like, all those little things actually make a huge difference, because, you know, when you're looking at a new opportunity, everyone's reading the sim that's presented to them, but maybe you read an article from Bloomberg that talks about this company and highlights a ton of negative aspects about the company. So it's, like, constantly staying curious about your sector and your industry, and constantly, like, wanting to understand more. When I first joined the job, I was like, how do I learn more? Like, how do I, like, I'm doing kind of like, I'm, reading the sim, I'm putting together the presentations, but like, how do I do more and become good at asking questions? And it's like, you take a page and it shows a bunch of competitors. And so then it's understanding and Googling and knowing what do all the and you have to get something done by a certain time frame and everyone's stressed to get there, but that can be the most exciting and best learning opportunity that you get in terms of a deal and in terms of like development. So it's always seeing things like in a positive light, and there always will be tough times, but there will also be times where you get to like synthesize everything and say like, oh, okay, like what did I learn from that? How did I get better? Like what can I do better next time to like be a better associate, and all those kind of things. And I think that in the end of the day, like people will put you on deals because you're great to work with, not because you are the most technical.
Speaking of technical, and this is a great headway into our final question, but I'm going to address the fears of many people who are on this event. What advice do you have for the technical side of the interview?
Yeah. So I remember, like a little bit of background. The private equity recruiting process is really, really crazy. And I probably interviewed for 10 or 15 mega funds before I got GS. And I'm, not ashamed to say that I got rejected by these 10 because I was honored to like even be invited for the interview. But what I learned from it was that all of these interviews asked me different questions every single time. There was never a time where I was like, I know this answer, like done. So I think that like where it truly comes from is like doing your investment banking job or doing your classwork if you're getting prepared for investment banking, and actually doing it and understanding it, not just going through the motions. Because I can go through a deal and I could understand, oh, company A bought company B because of XYZ. But just because they bought company XYZ at whatever price and for whatever reasons doesn't mean it was the actual right reasons to buy the company, or the things that you think are the reasons that why you should buy the company. And so, fully understanding, like when you saw a deal, like what do you think? Do you think that was a good investment? Yes or no? A. B is like, why do you think it was a good or bad investment? And like truly understanding the drivers behind like every deal that you're doing, every decision that's being made, why people are doing things certain ways, the game of the process, like why some people are better positioned in a process than other sponsors. And then in classwork, if you're getting prepared for investment banking, it's understanding, like actually, not taking the class that'll get you the A, but taking the class that the professor's super tough and he's going to make your coursework really tough, but you're like, okay, it's a great learning experience and I might take an A- or a B or whatever it is, but you know what, I'm going to come out a better person from it. And similarly, like any club, I'm going to join this club because it's a huge learning experience and it's a ton of time, but I'm going to learn and take away something from it. So I think, everything you do, and like, this is just like the best way to become technical, is just like seeing as much as you can and doing it meaningfully.
So building off of upon this amazing insight, great suggestions, our final question is, what kind of advice would you have for Fordham and NYU students interested in pursuing a similar career path?
Yeah. So I would say just being 100% honest and true to yourself on what you're interested in and what you want to do, because the monetary or the prestige or the brand name, whatever it is, it wears off, and it wears off very, very quickly. And it just keeps getting more and more competitive, more and more responsibility, more and more ownership. And if you don't like that, and if you know that that's not the place for you, it's 100% okay to know and do something that's not what the other people are doing. I think it's like very easy, especially when you're investment banking, to go to private equity or to go to VC or whatever it is. But like actually understanding and saying like, I want to go away from the pack. I want to do this. Like, I want to see this. And I think especially like right now in our career, a lot of my friends are reaching that point where, they went to XYZ fund and it's the best fund and all this kind of stuff, but they realize this is actually what I'm interested in. And, I like this. And, I don't think there's ever a wrong time to know what you want to do or when you want to do it. But I think if you're always true to yourself and say like, okay, I'm going to check in. Like, I just, reached a milestone. Do I like this job? Like, what do I like about it? Is it something that I want to stay in? What are people 2 to 3 to 5 to 10 years doing above me? Is that something I want to do? And just constantly like having those check-ins with yourself and figuring out like the right way to do things, even if it's not like the status quo.
Okay, well, I think that's it for us for our questions. I think we're gonna go to the audience and see what kind of interesting questions they have. All right, guys, if you have any questions, just please feel free to.
I think Ethan has a question. Ethan, go ahead.
Hi, yeah. Thanks, Clarissa, for taking the time today. You touched on this a little bit earlier, but can you go into a little bit more detail on the differences between recruiting for banking and recruiting for PE, and how you recruited for private equity while you were working full-time?
Yeah. So in banking, I think that just numbers wise, taking a first crack at it. So numbers wise, you have each bank and they have 50 to 100 spots per bank. And so you come in with your analyst class and it's a larger class, and there's a very set kind of schedule for the undergrad process, at least, where it's okay, I intern and then I get a full-time position, or I didn't intern there but I make it into the full-time class and everyone graduates together. And I would say that the interview process is definitely more standard in terms of questions they ask, preparation that you need to have, and there's obviously like a ton of different ways to get into these interview processes and be a part of it. But I think it's just definitely like more of a I would say like a standard template, I would say, to get into banking. I think so. Private equity is mostly run through headhunters, and so you meet with headhunters and they put you in a database and they figure out where in the database you rank versus all the hundreds of analysts that are also in private equity or consulting or other jobs. And so, you are competing against people that are currently in private equity looking to switch positions. You're competing against all the other banking analyst associates, things like that. And then you're also competing against like consulting too. So, and then numbers wise, these private equity shops, like for example, my team hired, I'm one of 4 in my class, and most of them hire like, 6 to 10, or, it's a lot smaller in terms of numbers. And so, there's definitely different bubbles and peaks and troughs of when private equity starts and ends. So, sometimes there'll be like a huge hiring where a bunch of the funds go out there and start hiring like crazy, and you kind of have to be on top of it. And if you don't have a good relationship with the headhunters, then they're not going to put you in front of the interviewing. And so it's really, talking to the headhunters, being on top of it early. They can call BS like this, so they know if you don't know what you're talking about, they know if you don't know what you want. So they're super on top of vetting, like, their job is vetting candidates for these private equity funds. So, the process is just, like I said, like a lot different where, maybe 10 get chosen for an interview. Out of those 10, one person gets a spot. So it's super competitive coming to these interviews and kind of getting to that next level. But like I said, like, all of my friends and I, like, we would just interview like as much as we could, and we were hoping for one to work out. And luckily, I think everyone kind of found the right fit and it all works out in the end. But it's definitely, I would say, like a very different process than like your traditional banking. And I think pros and cons too is like private equity recruiting, it's always happening. Like, I thought that if I didn't get X, Y, or Z, that was the end of the world. There was never going to be another opportunity. I was, oh my gosh, whatever. But then a couple months later, oh, we're recruiting, like a spot's opening up. Like, do you want to apply to try to interview for this spot? So there's always another round. There's always another wave. So if you don't get it like your first couple times, it's not the end of the world. Like, you just keep going at it. And I think also, I was gonna make one more point. But yeah, I was gonna say, yeah, like trying to balance it during banking. It's, a tough process. Sometimes you stay up till like midnight on like regular work stuff, and then you have to study till 2 because you have an interview the next day. Sometimes I've bombed interviews just because I pulled an all-nighter the night before. So sometimes it works, sometimes it doesn't. There's not really a good way to say it. I think really relying on like your other associates and analysts in the class who are recruiting with you really helps because you're all studying together. But yeah, it's an interesting process for sure.
Great, thank you.
Next, we have David Aguaya.
Yeah, thank you. My name is David Aguaya. I'm a sophomore at NYU. I'll actually be starting at Goldman this summer, so hopefully I can see you.
Yeah.
My question is, how does private equity at a bank differ from private equity from a firm that's specialized in that? And also, just as like a secondary question, but I heard that like the whole merchant banking division has been moved into asset management. How has that changed kind of the function of private equity and merchant banking at Goldman?
Yeah, so how GS is set up is that we are a traditional private equity shop, but we are under the broader GS umbrella. So we raise our own money from our LPs and we operate kind of as a separate arm, but truly benefit from the GS brand, which means that if we're competing in a process with XYZ, that we do have a lot of benefit to the Goldman Sachs name, and that we're able to leverage a lot of the capabilities from the bank. So, we're able to, if we need banking advice, we have a banking branch. Sometimes we use them, sometimes we don't. If we need hedging, we have like the whole S&T and the hedging branch to like help us out. So we're really able to like utilize all the different relationships and branches of GS, but we do operate as our own private investment arm. And then so we recently changed names from MBD. So originally we were PIA, which was private investment arm, merged with MBD. So now that took all the investment capabilities. So now we have a credit arm, we have a real estate arm, a growth arm, a special situations group, and then our group, which is the corporate private equity. And so, now we're all under the investing arm, and that got moved under the asset management division. So what this really did was it didn't change in anything on how we invest or how we look at investments or how we deploy capital, but instead it strengthened our relationships to be able to utilize like asset management's relationship to get LP money. So for example, if we're fundraising and we're, you know, in Alaska fundraising, asset management has a relationship with the Alaskan pension plan. And so we can talk to them now because we're all a part of asset management, versus before we didn't have that relationship to work with them before. So I think it's just, you know, they always like to say like, you know, we're still like ourselves just with a new name. But yeah, I would say nothing really changed except for gave us more capabilities to help fundraise and make our funds bigger. So
Wonderful, thank you.
Charlie Atkins.
Hi, Clarissa. My name is Charlie Atkins, and I'm a sophomore at Gabelli. The last time I heard you speak was when you were on the Young Alumni panel, and I asked you about your concentrations at the time. And I would just like to follow up, as I've now declared value investing as my own concentration as well. So what specific skills or attributes have both of your concentrations given you that have helped you during your time in both investment banking and now private equity?
yeah, so when I was looking at the differences and when I was your age, I, you know, didn't know I was gonna be able to touch upon both, which is great. I like took extra classes to fit both in, all that kind of stuff. So really fortunate that I got, you know, was able to see both. But when I was looking at alternative investments versus value investing, I had no clue what either were. And so I think that alternative investments, I really enjoyed taking classes with Professor Mirable, and he is the head of alternative investments. So I was definitely interested in the way he taught classes, what I learned from his classes. Like he definitely pushes you a lot, and that's what I was interested in. But overall, I found the classes super interesting. Like I took the derivatives class, I took hedge funds, I took real estate investing. And so I think just like conceptually, those were all things that I was really interested in, and it gives you a flavor for each of the different types of investing. And, you know, it shows you like, okay, what does a hedge fund do? How does it make money? How do they pay their LPs, GPs? How do you like, I think now in private equity, I understand like the whole ecosystem of like the LP is the people that provide the money, the GPs are us. So we're actually deploying the capital and are, you know, the people investing it. And, you know, we're trying to make returns for our LPs. You know, how are we paid in terms of like carry and just like, you know, co-investing and what all those terms mean. And also understanding like, you know, like hurdle rates and like all these kind of things that I honestly don't think like any school really like looks into like hurdle rates or any of this kind of stuff on like an undergraduate level, or I don't even know if in graduate level either. So like having that understanding of like what all those terms mean for private equity and real estate and hedge funds, that was super helpful. And then I also took the Kaya, which is a test that is involved with alternative investments. And that's just a test. It's basically like the CFA for alternative investments. And so I was able to take that through the alternative investments concentration. Value investing, on the other hand, so that's like it's a way of investing, and it's a thought process, and it's a way how like Warren Buffett, Howard Marks looks at investing. And so it's a very fundamental approach where you understand, you know, you take a company and it's maybe been beat up, or maybe it's not getting the best press, or, you know, it's undervalued. It's a diamond in the rough. And you look at the company and you say, okay, right now it's trading at $10 a share, but let's say that the company didn't have this negative lawsuit that's going to happen. Let's say it doesn't have this like facility that's going to get built. Like, what is the true value of this stock? and you determine that like on an actual basis, it's $13. So you think it's a better buy. And so it's truly understanding like what like the net asset value is, like how things are trading versus how they should actually be priced. And I think like in terms of now investing, I think that that's super helpful because like we're constantly like reading Howard Marks, like they're like letters from Howard Marks where they always give like books that you should be reading, and most of those books were covered in the value investing concentration, and just understanding from a conceptual basis, like, okay, I know how value investors look at things, I know how growth investors look at things, what are the differences between the two, what's the spectrum of like how you invest. I think that's like, it's been really helpful.
Great, thank you so much.
Jasmine Song, you can go.
Hi, Clarissa. I'm Jasmine, currently a sophomore at NYU. And I'm just wondering what's the difference between venture capital and private equity?
Yeah, so VC, so think about investing or like buying companies in terms of, you know, like the very early stages where basically someone has an idea and they say, I will give you money to go make that idea. And that's like angel investing. So that's like the very like left-hand side of venture capital, where it's like you are literally giving them the dollars to go make their company. And that can basically lead all the way until like, you know, later stage VC where they've done like multiple rounds of like equity raises. And so you're a person that's giving them those like early stage dollars to make their company hopefully at IPOs. It could get bought out by a private equity firm. So I would say that like in terms of a company lifestyle, it's more on like the early to middle stage of a company life cycle. Growth investing is a type of private equity investing where, you know, they're more interested on like the earlier side, and instead of doing instead of having a company that's been around for a long time, you're kind of taking a chance on buying an early stage company that you're expecting to grow a ton in the future. Private equity usually looks at more later stage. So this will have, you know, historical financial performance, or maybe they're a part of a bigger conglomerate and it's getting carved out of a bigger operating company. You know, sometimes it's like a company that's been bought multiple times by private equity firms. And so it's like usually late growth to later stage is where private equity takes place. And, you know, there's different styles. Like with a private equity investment, you usually put on debt and equity, and it's very like vanilla, like we call it. Whereas in growth, you know, you'll usually do like a preferred investment. So you have like an equity component, but you're still protected. And then in venture capital, you're definitely taking a chance. You'll buy probably 5 to 10 companies, and you hope that 2 of those companies are the unicorns and, you know, they skyrocket, and that's how you make your money. But your other, you know, 3 to 8 don't do well, but you made money on the other one. So that's kind of how the portfolio is balanced out. Whereas in private equity, you hope that all of your companies, because they're later stage and they have more operating history and financial performance, you can tell that those have, that they're hopefully all gonna do well versus some tank. So.
Thank you.
Yeah, no problem.
Yeah, we're done for the questions, I think. If anyone else has any question.
Okay, guys, thank you so much for attending this event. It's been a pleasure. Please be on the lookout for future upcoming events. I think, Victor, you wanted to say something before we wrap up, and you had some comments?
Yeah, sure. As a co-president of NYU Economics Society, well, first of all, I want to thank Clarissa for coming today, and really what I really enjoyed is that when you spoke with this positivity and the passion, especially about the banking, which was great. Thank you everyone from our end, from NYU Economics Society who came, also to the PEVCC club who co-organized this event with us. And we also wish to see you in our future events. I think Gabriel or Anviti will put some credentials in the chat, not credentials, but like email and the website. Also, Gabriel, do you have any other questions to ask or not?
No, I think I don't have any questions. I'll just double up with Victor and say thank you very much to everyone who helped organize this, and thank you to everyone who came. It's been a real pleasure and a very interesting time. A lot of interesting questions and a lot of interesting answers.
Yep, and I'm just going to chime in really quick. Thank you all for joining from the Fordham side, and thank you to the NYU side for collaborating with us. And I know Lev has a very big thank you to give to our speaker.
Yes, Clarissa, thank you so much for coming back on campus and doing it with us. We really appreciate it. We know that the Fordham community has been wanting for you to come back. And so I think this has been a very successful event. It's been very interesting and people are coming away with a lot of insight. And I think you've given confidence to a lot of students who are entering or hopefully entering the private equity and investment banking industry. So thank you again. If everyone can please give a warm applause for our honorary guest, Clarissa. A lot of those E claps if you see that, but we get it. So thank you guys. Thank you, Clarissa. Thank you, everyone.
Thank you for having me. It was a pleasure coming back, so thank you.
Thank you so much, everyone. Bye-bye.